US beer consumption continues to decline. We explore the challenges faced by Modelo and Corona. Warrants are juicing OpenAI's deal with AMD, diluting the chip maker's shareholders. We bust through the jargon to break down just how those warrants work. And the New York Stock Exchange becomes close cousins with prediction markets. Why does this matter? For Tuesday, October 7th, it's Brew Markets Daily, and I'm Anne Berry. More market details to come. But first, US stock exchanges have been making moves to get into the same family as next-gen trading options. We've talked on this show before about Nasdaq taking a $50 million ownership stake in Gemini, the crypto exchange, in preparation for offering more digital asset trading on its own equities exchange. And just yesterday, we talked about prediction markets, which is a relatively new set of contracts in which users wager on outcomes ranging from sports match results to just how long the US government shutdown might last. Check out yesterday's episode for more on how it all works. Well, the New York Stock Exchange is now getting closer to the prediction market action. Just today, the owner of the 233-year-old exchange announced a $2 billion investment in Polymarket, which was founded just 5 years ago in 2020 and is a cryptocurrency-based prediction market headquartered in New York. Now, Polymarket has been plagued with controversy almost since inception, with the US Department of Justice and Swiss, French, Polish, Belgian, and Singaporean regulators all investigating the firm in recent years for alleged violations of gambling rules. Only as recently as this July did the DOJ end its investigation, with Polymarket then buying a regulated exchange so it could legally operate in the United States, having been off limits since 2022. Now, the New York Stock Exchange, or NYSE, is itself owned by a public company. That's one of my favorite fun facts. And that parent company is Intercontinental Exchange, trading, yes, on the New York Stock Exchange with the ticker ICE. That's ICE. Now, with a market cap of $92 billion, ICE operates through three main divisions. First, exchanges, including the New York Stock Exchange and 12 other regulated exchanges and 6 clearinghouses, and they're located globally. Second, mortgage technology. And third, fixed income and data services, which facilitates debt trading. Now, across all these three segments, all over the world, ICE collects, aggregates, and monetizes massive amounts of data, from equities to commodities to bonds to real estate. And now, with its cash going into Polymarket as a strategic investor, ICE will become a global distributor of Polymarket's event-driven data and sentiment metrics, adding to its already large treasure trove of analytics. And it's going to lend the credibility of its trophy assets just by association, like the New York Stock Exchange, as Polymarket pushes back into the US market with a sparkling new $8 billion valuation, and prediction markets, as a result, seeming to go ever more mainstream. Now, ICE said today that it will provide more details on the transaction on its earnings call later this month. So we are going to keep watching. And meanwhile, ICE shares up about 1.5% on the news. Coming up, Constellation Brands' earnings shines a light on demographic differences. And we answer one listener's question on how warrants work for OpenAI. But first, a word from our sponsor, Capital Client Group. Now, our producer John and I were talking about some other podcasts that we listen to.
That's right. Are you looking for smart, candid advice to help grow your career? Well, the Capital Ideas podcast brings you real conversations with Capital Group leaders and investors, sharing their lessons, challenges, and turning points that shaped them.
Whether you're just starting out or thinking about your next chapter, there may be something here for you. Listen to the Capital Ideas podcast from Capital Group, available wherever you get your podcasts, published by Capital Client Group, Inc. Well, it's time now to talk about adult beverages. That's many syllables for saying beer. Because despite posting second quarter earnings that beat Wall Street's expectations this week, it doesn't seem like shareholders in Constellation Brands, which is the US distributor of Corona and Modelo beers, are going to be cracking open a cold one to celebrate. Sales are down at Constellation, but also across the industry more broadly, which has prompted investors to ask which headwinds are at play. Let's unpack the demographics. And can Constellation specifically find a way to navigate them? So our producer, John, I think having sampled a couple of beers in preparation for this segment, Tell us about some of your learnings from the tastings and from the earnings report.
Yes, I'll start with the earnings report, and then we can get back to my review of the beer. Constellation brand is ticker STZ. I guess that's stars in the Constellation. Market cap near $25 billion. And like you said, the company reported earnings of $3.63 a share, a beat of 5 cents. But that's down 16% from a year ago, and sales declined 15% to about $2.5 billion. Specifically for beer, net sales were down 7%. So the company lowered guidance in September, so expectations were already sort of low today. I heard analysts saying that this was the least bad outcome for the company. The stock price was up about 2% today and then edged down, and it's down over 40% year over year. The entire beer segment is depressed.
Well, let's take a look at the rest of the beer segment then together. So we've got Anheuser-Busch InBev, which is another big player in the beer space, right? First half of 2025, sales volumes declined 2%. By the way, they were also down, do you remember this, in 2024 and in 2023. And the share price of the company, ticker BUD, that's Bud, because yes. John, give us the top brand over there.
It made Budweiser.
Share price down 10% year over year as well. Then there's Molson Coors, beer sales down just under 2% in the second quarter. Share price, ticker, TAP, TAP, all the best tickers in the sector, down 16%. So everyone's feeling some version of the pain here, right? And it's interesting because there's been a lot of speculation as to why not just beer, but spirits in general have been seeing a decline. You and I have talked about Diageo in the past and some of the other wine brands.
That's right.
And tariffs have been at play, but also this debate has been, even without tariffs, how much pressure are those brands facing?
Is it generational?
Right.
We've seen the rise in mocktails, even bars serving non-alcoholic drinks. There's brands like Athletic brand, non-alcoholic beer. And so this is a big question if this is a trend that the next generation, Generation Z, if they're not drinking as much. I thought this was interesting. On the earnings call, Constellation said that over spring break this year, they saw that young people were mixing OJ and Corona, which is one of their brands. And so the company launched a nationwide rollout of Corona Sunbrew Citrus Cerveza, which became the company's #1 dollar SKU so far this year. So they're trying to tap into that youth market.
I haven't tried that one yet. I got to tell you, the weather is so mind-bogglingly pleasant at the moment. I feel like summer's been extended, so there's still time to try that OJ Corona mix. Let's actually listen to what CEO of Constellation, Bill Newlands, had to say on the recent earnings call, because he was asked if the company felt a general threat from two areas. One was weight loss drugs. The other was cannabis. Let's hear his response.
There just isn't a lot of evidence that GLP is having much impact whatsoever. I think cannabis could be, as you go forward, to be frank, because, as consumers are constrained about their spending patterns, they make choices as to where they spend their discretionary funds.
Interesting. He's really prescriptive in his answer, right, John? So you and I have talked about snacks on the show before.
Sure.
And there's been this question around, is GLP having an impact or not? Here, CEO Bill Newlands was super clear, we don't think it's GLPs.
He doesn't seem to think that, but perhaps weed and cannabis, a different type of vice, or however people see it, might supplant beer in the younger generation.
So seeing perhaps some substitution there in their discretionary spending for recreational consumption. The other area that was touched on in this earnings call, which I thought was fascinating, is the fact that over 50% of Constellation's consumer base is Hispanic. And now earlier this year, the company has seen a rapid drop-off of sales for brands that are particularly popular amongst that demographic. Talk to us about what we learned on the earnings report with respect to that specifically.
Executives have said that the White House immigration policy has impacted social occasions. And so there's fewer people gathering, friends and family in public spaces. And so they attribute that to some of the decline in beer sales.
Well, this is one of the reasons that we love the market so much. Or I'm biased. I actually love talking about the markets. And one of the reasons that I really enjoy earnings season, because it's an opportunity to look at a company, not just see the headlines, not just read the press release, not just see what the share price is doing when it's bopping around, but it's actually digging into the earnings calls, listening to them, looking at the transcripts. And this to me is fascinating because this is just one company in one moment in time. And here we are touching on so many questions around the consumer by demographic, by preferences with respect to cannabis, for example, by talking about a health and wellness trend like a GLP, by looking at what's going on at this company, specifically what's going on in comparison across the entire industry. So I'm just sharing that enthusiasm, that passion. John's nodding, just thinking, oh, she's going off on one. But this is really why looking at the markets for us is so much fun. And we would just love to get your feedback on specific companies that you want to look at, specific consumer trends that you are observing that translate into thinking about which stocks to invest in, because at the end of the day, it's all data gathering with which to make these investing decisions. Well, let's take a quick break. And when we come back, warrants play a big role in OpenAI's deal with AMD. So what are they exactly? John, we have a question from the audience.
That's right. Jerome in California wrote in, and you mentioned on the show yesterday that OpenAI is getting warrants in chipmaker AMD. What are warrants?
Well, thank you for asking, Jerome. Any excuse to nerd out on technical finance brings me so much joy. So I'm excited to dig into this one. Now, warrants surface in actually a lot of situations, and they just don't get enough attention. And in preparation for this, I actually poked around the OpenAI AMD deal documents some more, so I'm going to come back to that in just a moment. First of all, here's how warrants work, and stick with me. It's worth going through the pain of the detail on this one. So a warrant gives an investor, who's known as the warrant holder, the right but not the obligation to buy a company's stock at a specific price. That is a prearranged purchase price known as the exercise price or the strike price. And the warrant holder, if they do decide to buy, has to do it at a preset expiration date. So let's go through a numerical example to see how it works. Suppose I get a warrant to buy a share in a company for $1. That's the strike price on January 1st. Now, when Jan 1 rolls around, if that company's stock price is above $1, let's say it's $10, then I, as the warrant holder, can buy a share for just $1. But because it's worth $10, I've got a $9 profit, either on paper or if I turn around and actually sell that share with $9 of cash profit now sitting in my pocket. But suppose Jan 1 rolls around and the share of this company is really worth 50 cents. That is less than the strike price of my warrant. I wouldn't buy a share for $1 if it's worth only 50 cents. So I would just let the warrant expire. No cash goes out of my pocket. It's worthless. Now, companies issue warrants to raise money or make their deals more attractive. And in these cases, investors may get to lend to a company or take an equity stake, plus get warrants with that debt or equity to get extra upside if the company performs well. Now, we tend to see warrants when there are higher risk situations for investors, such as when they're putting money into startups or companies emerging from restructurings and where there's still a lot of work for a company to do to turn things around. So it's a little bit more curious that it's here happening with a company as mature as AMD is. Speaking of which, let's dig a little bit more into OpenAI's deal with AMD. Now, I nerded out. I read the SEC filing that AMD issued with the details of this warrant deal. It is literally here in front of me, very small font and very dense. That's what I do for the show. Now, under the deal, OpenAI will get to buy up to 160 million shares in AMD at the warrant exercise price of 1 cent per share. 1 cent per share, right? Now, bear in mind the AMD stock price today is over $200. So think about it. OpenAI gets to access for just 1 cent per AMD share worth today before any growth over $200. That's unbelievably attractive access. So too, in theory, is the fact that the maximum cash that OpenAI would pay for those 160 million shares at just 1 cent each is a total of $1.6 million. Now, OpenAI is burning cash. We all know that. So the beauty of this deal for OpenAI is it's set up to get them up to a 10% equity stake in AMD without shelling out a ton of cash for it. $1.6 million for all that value is not a lot of cash. And now there's even more. In practice, this deal is even juicier because it's structured with something called cashless exercise, where OpenAI doesn't actually have to pay out that 1 cent in cash per share. That strike price essentially just gets deducted. It gets gets out through the wash from the profit when the time actually comes for the warrants to turn into actual shares themselves. Now, OpenAI doesn't get access to these warrants all at once. They're spread out over the next 5 years. They're tied to AMD achieving certain stock price targets, which are as high as $600 per share. And they're also subject to OpenAI achieving technical and commercial milestones that are needed for AMD chips to be deployed at scale. So AMD needs to be getting their end of the bargain from OpenAI too. But if the supply relationship between these two ends under certain circumstances, this deal is over as well. Now, there's no doubt OpenAI is getting a lot in return for boosting AMD's revenue with GPU purchases. This is a particularly unusual deal. It's a rich deal, but it's one that AMD is banking on to make sure it's up there in the same sentences as NVIDIA when it comes to really staking out ground in next-gen chips. We're going to keep watching.
And if you have a question for Anne, send an email or voice memo to brewmarketshow@morningbrew.com.
Well, it's 4 p.m. on the East Coast. There it is. It's the closing bell. The market's wrapping up, and we don't have a ticker tape, but we're going to throw it over to our human ticker, John.
Thanks. Major indices were lower across the board today. The Dow was down 0.2%. The S&P 500 finished down nearly 0.4%, and NASDAQ down nearly 0.7%. Gold futures topped $4,000 per ounce for the first time today, up over 50% already this year. At a conference this morning, hedge fund founder Ray Dalio said he believes investors should allocate as much as 15% of their portfolios to the commodity. Listen back to Anne's conversation with John Champalia on our September 22nd episode. So much good context to understand the run-up. And the Wall Street Journal is reporting on a massive fire last month that leveled a key part of a New York aluminum plant. Ford is the biggest user of the facility, sourcing aluminum for its F-150 pickup, the top-selling vehicle in the U.S. and the automaker's main profit driver. Even though the fire happened last month, the report seems to be moving the stock today. Shares in Ford were down over 6% as the company works to shore up its supply chain. And finally, shares in Oracle edged back up after a 7% drop this morning. Apparently, the cloud business brings in lower than expected profit margins, particularly when it comes to AI services like the rental of servers powered by NVIDIA chips.
I feel like chips is just the word du jour at the moment. And we're actually going to finish somewhat in that space in a final thought with a quick touch on robotics. Now, NVIDIA CEO Jensen Huang has been saying that robotics represents the next AI frontier. He said it for a while. It's physical AI. And today there was news that Qualcomm is buying into the sector. The company said it's acquiring Arduino, I love that name, an electronics maker whose inexpensive programmable circuit boards and computers are common in hardware startups and robotics labs for prototyping. So we don't know actually the full terms of the deal. The price wasn't disclosed. And I just thought there was a fantastic sentence in a CNBC article that described it. It says, quote, "The deal gives Qualcomm direct access to the tinkerers, hobbyists, and companies at the lowest levels of the robotics industry." Any excuse to say tinkerers, I think it's a lot of fun. But just another sign that robotics is another frontier, another sign that M&A, mergers and acquisitions activity, is heating up. And by the way, one person's view, when terms of a deal and prices aren't disclosed, often a sign the market might think it's overvalued. Qualcomm stock was down 2% today. That's it, folks, for today's Brew Markets Daily.
Brew Markets Daily is hosted by Ann Barry and produced by John Croteau, Tarek Abdelatif, and Emily Milliron. Our technical director is Uchenna Waogu, Dan Bauza handles audio, and the president of Morning Brew Inc. is Devin Emery.
Wake up tomorrow with the Morning Brew newsletter and tune in to Neil and Toby on Morning Brew Daily. We'll see you back here tomorrow, folks. Same time, same place.